Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. We'll also take a brief tour through our core list of companies, and if you stick with me towards the end of the video, I've got 3 additional trade ideas to share with you, so definitely stay tuned for that. Let's kick off the S&P analysis as we always do with our sectors: who was leading, who was losing, and where was the weight. The XLY for consumer discretionary led the pack today, up 3.41%, whereas the XLE for energy is down at the bottom of the barrel, down 0.46%, about a 0.5% there, not the end of the world. The most important thing we can learn from our sector list today is actually the distribution of where the sectors fell. If we look at the top 3, or let's just go top 4, right? XLY, consumer discretionaries, the tech sector, financials, and communications, those are all fairly heavier weighted sectors. They're more aggressive in terms of the type of asset they are. They're more risk on, correct? As opposed to the bottom of the list, we have the energy sector, utilities, consumer staples, and real estate sector, more defensive in nature, more risk off. And when we see the skew like this is going to support and give us more confidence as we get a breakout of our daily balance. Now, don't get me wrong, we'll talk about technicals in just a second here, but the sectors make sense. There's no major red flag saying, hey, watch out, today's rally was brought to you by something like utilities. That's not what you want to see, and that's not what we saw on today's case. So we should have more confidence in this move higher based on the sectors that brought us this rally. In terms of the heavier weighted sectors, the XLK, the heaviest of them all, up 3.25. The XLF, the second heaviest weighted sector, financials, up 2.81, and then the XLV, healthcare, up 1.2. Let's check in on the charts though and start to establish, what's going on with trend. And if you take one thing away from today's video, although I was just speaking fairly bullishly about the daily time frame, and it was a very bullish day out there, let's keep in mind trend, right? If we think about this, we have a high, we have a lower high, and now we're at the resistance trend line. There's still possibility that this turns into a lower high. We know that our last major lower high was this one right here, off the back test of the bottom end of the range. That's roughly 150, and we did close above that on today's session. So it is slightly more bullish than bearish, and we are, as I've said, looking for follow through to the upside. But let's not forget that if this rolls over here, we're still in a daily downtrend, right? This is nothing more than a lower high from here to here if we roll over and come back down for the equal low. That would be fairly concerning, with then 4 touches at the bottom end of the range. Now, I don't mean to rain on everyone's parade, but I'm just trying to keep things realistic here. Keep in mind the trend. What I would need to see to start to have more confidence that this bullish move that unfolded on today's session is going to be sustained is some sort of higher low. So a little bit of continuation, a higher low that then holds 150 on the back test, and then something like that. Fantastic. We have equal lows down here, so we're establishing that, this is already becoming more neutral as opposed to bearish, but it will become more bullish if we can firmly break the resistance trend line and give ourselves a higher low above this level right here, 150 in our XLK. So let's not just have a knee-jerk reaction to a singular bullish day in the marketplace. Sure, it does look likely that we will get follow through to the upside, but for more confirmation in the long term, you do want to see that higher low form above that level which we just hammered home. So that's going to be the common theme throughout today's video. Let's continue along and talk about the XLF for financials here. This chart's a little bit different. We know that the XLK and the XLF have been different. They've been that way for a while. We know that this had this as an overall range. At first, we were back testing and failing here. Now we're clearly much more firmly inside of that area. So this, to me, doesn't really risk, or seem as risky rather, as the XLK for potentially rolling back over, right? Does it really seem likely that this will happen and we'll come back down for that equal low? I'm not really thinking so, right? So a couple of indications from this chart are that we are holding the gap up. We've closed dead at the highs. We've closed above this area of resistance. Again, just like the XLK, I'm giving it the benefit of the doubt on that close above, but we are looking for follow through if we get continuation into this level. Why is it 39.25? Well, as we know, when it was in free fall mode here, the dead cat bounce took us for a lower high right there. You can see that high of the green candle is at 39.25. What else is important about 39.25? I don't know, all of that. How about this resistance? How about this support, right? So that's the upside target. And again, this does strike me as being slightly more bullish than the XLK in terms of relative strength, relative weakness. In terms of pullbacks, let's say that we do get the bear case scenario. If we pull back, ideally we hold the top of the gap. That gap holds, right? And then we look for follow through to the upside after this becomes a clear, very obvious higher low from here to here. If we pull back further, I would want to see the gap fill and then hold for a gap fill reversal. And once again, that does produce a significant higher low. Even in the worst case scenario, we could come back down into 36.85. And as long as we do something like that, I would imagine that that still holds and constitutes a fantastic higher low here. We've clearly cleared, no pun intended, all of these highs, so we have a significant higher high. It does look more likely that the XLF will see trend continuation back to the upside in the near-term future, okay? So that's what we have in terms of the two heavier weighted sectors, compare and contrast, if you will. Let's take a look at the TNX while we're talking about financial things and briefly discuss what's going on with the FOMC. Now, I'm no expert in the FOMC and the Fed and their policy and such. However, let me just distill what they talked about during the meeting today. The market got exactly what the market expected. There was no sort of surprise 0.5 rate hike. That did not happen, and the market liked that. The market was not expecting 0.5, and the fact that it got what it was expecting, which was the 25 basis point or 0.25 interest rate increase, it liked that, and that's why we got that little bit of a rally. What we can also know or learn from today's conference is that Jerome Powell was very transparent that the expectation going forward for the remaining 6 meetings in 2022 is going to be continued 0.25 interest rate increases, okay? And it's not greater than, I shouldn't have used that, maybe an arrow is better, but we're going to continuously get 0.25 interest rate increases, and what we need to watch for is, okay, if inflation still seems to be out of control and we surprisingly get a 0.5 interest rate increase for one of the 6 meetings coming up into the remainder of the year, I do imagine that the market does not like that because it is no longer the expectation, okay? So that's the FOMC boiled down in a nutshell. You can clearly see in our TNX, we just got a little bit of a move higher. No sort of surprise going on there with the Fed supporting a higher interest rate environment. We saw exactly how that panned out in the XLK and the XLF. The financial sector seemed to have liked what happened on today's session, the continuous rates, I would imagine, and the XLK is sort of putting up with the new reality, which will be those increases in rates fairly steady throughout 2022, the remainder of 2022, right? So that's been digested. The pain has already been felt. I think the market's in a decent spot with FOMC, with inflation, and with the expectations going forward into the remainder of the year. Let's wrap up our sectors with the XLV for healthcare. Take a look at what's happening in here. You can clearly see, and this one's actually quite promising, if we look at this as an overall range, notice that this has been caught sideways for quite some time. Here, we have that significant higher low. We cracked this on today's session, so we have a short-term higher high from here to here, and we're also clearing the top end of that balance from here. So this does look poised in a fairly bullish position for continuation into this high from right here at 137. So short-term uptrend remains intact. We can now afford a higher low pullback, and as long as it's anywhere above 129, we'll call it for round number's sake, things are fine in the XLV, right? Something like this could happen. It's still going to constitute a higher low, and as long as we turn and make at least an equal high, things are fine in the healthcare sector, okay? So again, I'll just reiterate, I've been doing it for the past couple of months here. The fireworks are really between tech and financials, but this is what's happening in the healthcare sector because, of course, it is the 3rd heaviest weighted sector that we're watching. So that's our sectors in a nutshell. Let's continue along and talk about the VIX for volatility. Really important what happened on today's session. Notice that in the past, we had this upward channel, this trajectory of volatility continuing to increase as we were getting closer and closer and closer to Jerome Powell potentially pulling a fast one on us and giving us that double rate hike right off the bat, right? That did not happen. Volatility subsided a bit, and that's a good thing for the marketplace. As this gets lower, obviously, it means that the market's fearing things less. There's less uncertainty out there. Maybe people are more willing to step in, and the natural buying activity in the broad market indexes resumes. We get more of an uptrend that starts to build itself to the upside, right? So this is supporting the theory that maybe this is potentially the start of a bottom in our broad market. The sectors would sort of point that way as well, based on everything we've discussed so far. Let's take a look at the SPY now, the SPY itself, and see what's going on with this trend. Just like in the XLK, I do not want us to get ahead of ourselves because the primary resistance trend line has not been broken. Sure, we've closed right at it. We repaired the gap underneath. There was a chance for the sellers to step in. They could not materialize. We closed strong up at the highs. We're at resistance from the prior daily balance, but don't forget that we're under the resistance trend line. Going forward, what do we need to see happen? Well, in the SPY itself, you can clearly see that we already have the higher low. Now what we need to see is, can we take this level out? Can we break that resistance trend line. If that happens, fantastic. Any higher low pullbacks after that are outside of the resistance trend line strike me as being a bullish indication. We could get a day of pause tomorrow that looks something like this, digestion of the move. That strikes me as bullish consolidation, bullish acceptance at these higher prices. Maybe it's a break after a day or two here for rotation into our next level coming from the bottom end of this prior balance here, this area from that 2-day balance. It makes sense, right? That's 444. So I can see this continuing to unfold to the upside, especially noting now that this does look more firmly like a higher low. We've cracked this level. There was a chance for the sellers to push it back down under on that move lower on the initial announcement of the FOMC, right? They were not able to sustain prices down inside of the daily balance right here. We know that we're looking for a double of that range. It's slightly higher than 437, but again, it's all about the resistance trendline right now in the SPY. If we start to see weakening action and then we break back down underneath 429 again, so if there's a breakdown of 429 going forward here, to me, in the short term, this is a look above and fail. The target would become the bottom end of the range here at 417.50. That would also keep intact our continuous lower highs. Again, the sectors themselves do not look poised in a position where this is likely, especially with that big gap and hold in the XLF. Looks like healthcare is starting to push higher as well. The XLK is poised in a bullish spot as well. There's potential for follow through, but just don't get ahead of ourselves. Let's not get ahead of ourselves, as we pointed out earlier in today's video. All right, so that's what we have in our SPY, both up and down. Let's talk about our internals quickly. So if you're not familiar with this screen, go ahead and get familiar. Top right-hand corner is going to tell you what this is, how you can set it up, and how it'll help you make better intraday trading decisions. The most important thing that we can look at are the internals from today's session. How did the market itself as a whole respond to the new monetary policy? You can clearly see that volume was off the charts. Traditionally, we're looking for a 300 million plus or minus read, and we exceeded that 2 times, right? So, one time, right? We're at 600 million to the upside. So that's a really significant volume read. A lot of money, a lot of dollars, a lot of shares were being bought. A lot of positive volume was being thrust into the marketplace today. In terms of our advanced decline line, again, same thing, really hanging out up here in positive territory. As it dips a little bit on the first signs of maybe the FOMC isn't that great, immediately rebounds into the close. Strikes me as bullish. Never came anywhere close to the zero line. In terms of our tick, right, we're always looking at the cumulative build at the end of the day. Fairly bearish on Monday, I will give you that. However, on today's session, you can clearly see we've negated that on Tuesday with consolidation. That's fine. But on today's session, again, little dip, never went negative on the negative news as we went negative on the day. That's a lot of negatives. You get my gist, right? That never flipped here in the tick, and we closed strong up around, let's call it 3,000, right? So that's a solid read in our tick. Obviously, again, very bearish Monday, but that action has now been negated. We can have more confidence in this move higher here. What I do think is interesting is what we can learn from the market profile, where it becomes abundantly clear that we have a bit of a spike to contend with here. So this is the market profile. Again, if you're not familiar with this, I've got yet again another video for you. Top right-hand corner is going to describe some of the terms that we're about to use. We have a spike, okay? And a spike just means that late day action poked up, and we didn't really have enough time to confirm or deny whether or not these prices right here are fair. So start to treat anything that's above, let's call it 43.40 for round number's sake. And by the way, you should be rolling your contracts by now. We're on the M contract from H. Anything that's above this 43.40, we'll call it, is in the spike. So there's a couple of outcomes that we can look for here. Let me draw in the spike with a rectangle. There we go. On tomorrow's session, here's a couple of things to watch out for. If we open and immediately fall back down underneath the spike, this was an emotional move. These people are trapped with poor trade location. We would expect a rotation lower, at least to the point of control, right? It's a short-term trade, don't get me wrong, but that's a bearish indication rejecting this spike activity. If we get two-sided trade that resumes in the spike on the open, so tomorrow morning we get something that looks like this is just considered fair, right? And then we would monitor for the next move. It's not an overly bullish or bearish indication. If we open above the spike, it means that these prices are not satisfactory and we need to auction higher to find new sellers, right? No one's willing to sell here. That means we should go higher, and that's obviously the most bearish outcome. So look for any opens or acceptance above today's high to be the most bullish outcome into tomorrow's session. What else can we learn about today's session from a market profile perspective? Nice excess at the lows. That strikes me as being nice and bullish. You know, that auction, ended properly there. Value over the past couple of days has been building higher, right? If we think about value from Monday, here it is. What happened on Tuesday? overlapping to up, breakaway up. And then what do we have on today's session, right? Breakaway to the upside. So value is also moving higher with price instead of being left low on these profiles, something that looks like that. That would obviously be more concerning. It's not the case. It's not the case. So hopefully through our little introspection here through the broad market, you can see that it does look likely that we will get trend follow through to the upside, but wait for those resistance trend lines to break, right, for a little bit more confidence out there. Let's continue along and talk about the QQQ and IWM to round out our broad market. What do we have going on in the Qs? Again, just similar to the XLK, you can see that we have those equal lows. We technically broke this. We're at the back test of the bottom end of the range. We're above the resistance trend line. This is the secondary resistance trend line, not the primary, but it is still important. So that to me strikes me as being a bullish indication. Now, any higher low pullbacks ideally want to happen above 335 quarter. That strikes me as nice, solid price action up here. Could look like a little doji on tomorrow's session, as long as it holds up for some sort of higher low. Now we are looking for bullish moves back above today's high, the low end of this prior balance, for continuation to the top of the prior balance right here. More importantly, probably this level at 353. Okay, 348 might be a bump in the road, but this I imagine will act as the stronger magnet at 353. That's off of a higher low pullback. If we completely roll over and fall back down into this range right here, it's not the end of the world, but if we do crack 329, that would strike me as being more of an end of the world type scenario, noting that this would be a fake break and we would look for the equal low and then serious flush under 318. We know that some downside targets take us all the way closer to 300. Okay, so if this is going to be a fake breakout, if this entire thing was a big facade and the market's going to roll over, then this is really what you want to watch for. I don't think it's likely based on everything we've discussed so far, but that's what we have for levels to the downside, and that will all be kicked off from 329. So critical levels in your QQQ, 329 on the downside needs to hold now for a higher low pullback, and then we're looking for breakouts up and over 340 to get us closer to 353 in a nutshell. Let's continue along and talk about IWM Russell 2000 and our small caps. What's going on in this name? You can see this is much more similar to our XLV for healthcare, right? Here's your area of balance. What's going on? We're clearly up towards the upper third. That strikes me as being more bullish than bearish, but overall, we're still in the chop, right? There's easily a possibility that we get into the resistance trend line, pull back a little bit, go sideways. This is not looking as bullish or playable, rather, as something like the SPY and even the QQQ sitting right at those inflection points. This one could easily go a little bit higher tomorrow, bump its head and pull back and continue to chop, right? So this doesn't really strike me as being overly bullish or overly bearish. I suppose you could start to at least acknowledge the fact that there's a resistance trend line right here. If it breaks, again, you have a very short move available to you. And even if that goes 208, we know that 208 is the all-important level. I don't need to be a broken record, right? If we do something like this, you just get the sense that it was the low end of the prior weekly balance. We're still underneath it. We're stuck in this sideways chop zone. The trend isn't abundantly clear. We have lows, we have higher lows, we have highs, we have lower highs. Be patient in the IWM. If you want to do the back and forth ping pong trade, that's fine. There's nothing wrong with that. But for an overall directional move to be produced, it's still got to be up and over 208 or down and out under the lows at 188. All right. So that's IWM in a nutshell. Let's continue along and talk about our core list of companies very briefly. What's going on in these? You can see that Apple is still very well below its trend line here. However, we're back above this level, the 157. Remember that was important from the 2-day lows here. We filled the gap underneath us on today's session. That's a good thing from a structural repair perspective. What do we have going forward? Well, clearly, if we get follow through to the upside, it's all about this level 162.50. That's been a big inflection point in the past. That's what I would watch for if the rest of the broad market's moving higher tomorrow. We open on some sort of gap. If we want to see a higher low pullback, it's got to be above 157. Right, you can clearly see support, obviously fake break, rebounded right back above, but support in here. Anything that now holds that strikes me as a short-term look below and fail on the level itself. It's not really a balance play, but you get the gist. Higher lows that hold above it, that's going to be a beneficial thing for Apple here. Anything that falls underneath, just look for the equal low and trend continuation, right? This could easily continuously turn into a lower high if we immediately turn around and make it down towards those lows at 152. So don't forget that, right? Theme of today's video, let's not have a knee-jerk reaction. Sure, the broad market is poised in a bullish position, but we need a little bit of proof first. Okay, so that's Apple in a nutshell. Netflix, what do we have going on here? Again, this one's underneath its resistance trend line, right at it as of right now. So it's still bearish, right? There's still opportunity for this to be a lower high from here to here. If we roll over, the target is the equal low around 330. To the upside, really, it has to be a break of that. 362, it's today's high. It's the resistance trend line. Consolidation here strikes me as fine. Wouldn't be overly aggressive until we can clear that level and then make the trade into 376.80. From there, we would reassess. Once the resistance trend line breaks, do we have a different pattern that's starting to form? Can this do something like this? Inverted head and shoulders, right? Maybe that's a possibility. Break of the neckline takes us back higher. We'll see. Over the course of time, maybe this starts to become a reversal, but as of right now, with the lower low, I'm not overly convinced that this is just going to automatically do something like this. Now, could that happen? Again, anything can always happen in the marketplace, but to me, it doesn't seem likely that we just see a massive break. Instead, maybe a little bit of consolidation, some follow through into this prior level right here. Again, 376.80. Let's continue along and talk about Tesla. This one's really obvious. If we look at it on the daily time frame, look at this resistance trend line continuously producing higher lows. We're right at it, and we have a lower low. So we can afford this higher, it would be lower high pullback, right, in the opposite sense. So anything that happens here, anything here strikes me as bearish, to be quite frank with you. To be bullish on Tesla, I would need to see the recapture of 854. We've talked about that pivot point almost endlessly the past 2 weeks or so. If that happens, again, there's your higher low. There's the better reversal in Tesla. As of right now, anything that remains below it, I'm not entirely convinced. I want to see the break and then retest for higher low before I start flipping bullish below activity. Maybe it ends up flushing 800 again to get into this equal low at 762. Again, at the resistance trend line, I think we're going to learn a lot about this tomorrow, whether or not we get a strong break or just a day of consolidation, which would strike me as being much weaker, still remaining below the resistance trend line. Okay, so many of these stocks are at a pretty critical juncture here, and just being in a downtrend, it would behoove you not to really respect that and say, okay, there's possibility that this still turns into, yet again, another lower high. So let's continue along and talk about AMD. What do we have in AMD, the new kid on the block? This one firmly looking much more like our QQQ and SPY, breaking out of the balance here, but at the resistance trend line coming from the anchor, touch 1, touch 2, 3, and now touch 4. So the question becomes, do we consolidate above? And in this one, ideally, we hold on to, let's call it 112 for round number's sake. That would be bullish, something that does this. Then we're looking for follow through to the upside, 118.82 on day trades. Anything after that, more importantly, this level, I would actually start to say, we don't want to clear the whole set. We just want to remove that. So anything that does this and then breaks this high here, let's draw that in. It's roughly 116. So consolidation, then a break, should take us closer to that pivot high around 124. That's potentially a decent setup to watch here in AMD. Any breakdowns back below, and as we've talked about in prior charts, that sets up the look above and fail. Target is the bottom end of the range here at 100 even, producing once again another lower high off the resistance trend line. So at an inflection point, don't have that knee-jerk reaction. A little bit of patience here will probably serve you well in these charts. Next up, Facebook, clearly different, right? Breaking the resistance trend line in a major way. If we zoom in, this one's kind of ugly. I know we've got to get it off to the left. We get it. So what do we have here? Equal lows. So that's automatically more bullish than the lower lows that we saw in almost everything else. Netflix, namely, because it's a similar pattern in terms of chart, but the equal low, so that's more of a bullish indication, neutral at minimum. And now we break the resistance trend line and we've actually closed inside of this balance. Again, giving it the benefit of the doubt, it's really a close right at the low end, not firmly inside. So we'll see, but any higher low pullbacks in this one strike me as extremely playable for a break here to at least take us to the top of this prior flag at 212.50. So definitely keeping an eye on Facebook for any higher low pullbacks. Now that it has firmly broken the resistance trend line, it's given us that double bottom here. If you want to count this as your double bottom, technically a break of this neckline was the trigger at 198.65. So if you were watching for pullbacks, ideally it holds there. It doesn't have to hold there, but ideally it holds there. As long as we're respecting the gap up on today's session, we hold that. Today's low, fine. Look for breaks over the course of time, maybe after an ascending triangle, symmetrical triangle. This to me is starting to look fantastic for reversals back to the upside, at least in the short term. Again, it doesn't have to be a move all the way to the top of the gap, the yellow line way up here, but in the short term, it does look positive, breaking that resistance trend line and starting to change the trend here on the Facebook daily off of the equal low. Continuing along, talking about NVIDIA. Symmetrical triangle. Break of the range from the daily right here. Break of the resistance trend line coming from the all-time high, mind you. This strikes me as being more bullish. Because we're inside of this range, we've closed right at the top. Let's see if we get a little bit of consolidation. That strikes me as starting to form a short-term bull flag. Breaks from there, take us into 266 quarter. This level is not really so important anymore. We get the gist. It's really the double top that's going to be our target around that 266 quarter, as we just pointed out. So any consolidation that holds up above 233.50s, fantastic. It's also the top end of the prior range from from right in here. We know that we have this scenario. There we go. Higher lows from here to here, higher high from here to here. Fantastic. Trend continuation takes us to that target. To the downside, the look above and fail is still in play here potentially. If we get a breakdown of that 233.50, look to target at least the support trend line on the daily and this 219 area coming from an intraday inflection point. If we just flip over to a different chart, let's pop this on red. And 15-minute is fine, but we need more time. Let's just go with the 30. There we go. You can get the sense that right around in here, resistance, support, breakout stemmed from there, right? So that's really what we have for that intermediate, level 219 on our NVIDIA intraday, and why, again, it might not be all the way to the bottom end of the range at 210. Maybe there's a little bit of support early, but nonetheless, a look above and fail is still a possibility inside of NVIDIA. Again, closing up at the highs, things do look more bullish than bearish, but just watch out for all of these scenarios given that the broad market's not fully resolved itself yet. Continuing along, Microsoft, what do we have on the docket here? Continuous lower highs from the resistance trendline, firmly underneath the resistance trendline, but breaking out of this range. As we've discussed in the past, 300 is really the critical mark that we need to beat. So as of right now, consolidation that happens above 290, fantastic. Eventually we break the resistance trendline, 300 becomes the target, and then you reassess the chart. So consolidation here, break, there's your target. From there, reassess. Do we get a higher low pullback, equal high, then we break? Do we get something that just does this? I mean, there's a number of ways it could happen, but the more playable ways are going to be consolidation, then a break, target 300. Once we get there, shave some of the position and reassess. On the next break of 300 after a higher low, if there's just big momentum, you're looking for follow through. That's where the range really opens up into 311, 11-point range to be trading forward to the upside. Again, this strikes me as being bullish, higher lows, breaking the top, but we're still underneath the resistance trendline. So please do keep an eye on that. All right, to the downside, just like everything else, we still have the possibility for a look above and fail. If we fall back down underneath 290, start to target the bottom end of the range, I would really look at our 280, not so much this level right here, instead 280, right? Something that does this, not here either at the 271.64, because we clearly already have the higher low. It would just be the low end of the balance. Again, 280.85. Next up, and last but not least, Amazon, the beast. Before we get into 3 additional trade ideas, this one closing right on, slightly above its resistance trend line. We know from the weekly perspective, there's a lot of resistance back up here, not only from this, but its prior support. Let me illustrate that once again. I know I sound like a broken record, but here you go. Keep all of that in mind, right? If this is going to be a double bottom, then technically the trade is once we clear the neckline of that double bottom, which is 31.76. If that happens, the next target is 33.35, to the upside. So still patience here inside of Amazon on the longer term perspectives. From the short term daily perspectives, what else can we learn? Again, the resistance trendline breaking is a slightly more bullish indication, but what are you going to do? Trade it into this top right here? That wouldn't really strike me as too wise, so I would want to see the consolidation, the sort of higher low pullback, and then follow through to the upside to get us into that 31.76 that we just discussed on the weekly. It also starts to form really ugly, I know, but some sort of inverted head and shoulders, right? Something that does this. There's your neckline. Let me just draw it in like that. Maybe that's a little easier to see. That break takes us into that area, right? So really start to watch that 3100, this general area of resistance for your next long trade. Any consolidation that happens for a day, then we break. Fantastic. Any higher low pullback. So if we get an aggressive down day tomorrow, you want to see it stop at this level, right? And the reason being is at the bottom end of the prior range. It's resistance right here. That's what we want to see now hold as support. That's 29.85. Consolidation here's good. Breaks then take us into that 31.76. So enough of that. Enough of our core list of companies. Let's get into some of these additional ideas. First one's on HD and Home Depot. Is, of course, the higher low double bottom. So touch 1, touch 2, clear higher low. You could start to call it an ascending triangle. The beauty about this is that we have a gap to trade for overhead. If we can clear the top of this range in here, around 335.18, if that breaks, just look for the gap to fill. That's a day trade, right? You're looking at 344 quarter. There we go. So that's the upside play here inside of Home Depot. From there, yeah, monitor for continuation, but I would take off a majority of the position, probably 3/4 of it, especially if you're trading options in short duration. To the downside, if it never breaks, you do want to see it continuously produce higher lows and kind of stay on par for that support trend line to remain intact. So we'll just draw that in, something that looks like this. As long as we're consolidating and putting more pressure on the top there, the trade is still in play. If the support trend line breaks, you want to see it hold this level, and anything underneath, not really in play anymore. I would take it off of my radar. That's Home Depot. What do we have up next? We have TWTR for Twitter, and this one is a break firmly of the resistance trend line. So just monitoring now that we've broken it for follow through to the upside. The next trade is long up and over these highs. If we grab the other tool and try that one more time, here we go. So consolidation and then a break, or just a break right off the bat. Now that we have a break of the resistance trend line, we're on breakout day 1. If we get a break there, so let's just call it 36, next target is this set of highs in here. We'll put a level to it, around 37.80. That's probably a day trade, right? We can travel that range over the course of one day. Although it's not common, it could be achieved, especially if the right amount of volume is coming through as well. So any uptick in volume, if you see this gapping up, it's on a lot of people's radars, that could be a trade to the upside here. Not interested if it never takes out that level, and certainly taking it off the radar if it breaks back down underneath the lows here at 34.31. Anything down below there, not interested in any type of trades. You'll also get the sense that we have, we want to get the other tool and draw on a support trend line, right? If we do something like that, you can clearly see that we are continuously producing higher lows. So that strikes me as bullish as well, right? So watching for follow through to the upside, a little bit of a reversal here inside of Twitter if this is truly going to hold as some sort of temporary bottom. Next and last additional trade idea is going to be on XOM for oil, right? XOM, not IN. There we go. And the idea here is that we're stuck in 2 days of balance, right? Many of the oil stocks look like this. Watch for, either breakout up and over the highs. We're going to switch tools one more time. There we go. We'll draw on the highs and the lows. And you're just going to treat it as a 2-day balance, right? Very, very simple when you get these setups. It's either you break the highs and you fill the gap overhead. That's the first trade idea. So in XOM, that would be up towards 80.60 from 79, we'll call it. So that trade is, $1.50 or so. Could be worth your time, But more importantly, the breakdown of this level, and if oil and energy starts to collapse a little bit and the things overseas start to, be more firmly resolved, right? A break of this 76.30 gets a little bit ugly. We know the structure on the way up was very thin. The next major area to pay attention to would be here. If we grab the other tool, lots of tool changes today. There we go. So the first level is going to be 74. And then after that, it's the pullback low from the first gap down around 70, right? So watch, if there's a deterioration in oil, then these are the levels that you're going to start wanting to pay attention to the downside. And because we have a 2-day balance here, it's going to put really easy rules in play, right? Either over the highs for the gap to fill or under the lows to start to target some of these prior structural elements from our daily chart. That's going to wrap up today's video. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is linked in the description. And all of that being said, I wish you a green trading week.